Hi, it's Eric Ogard, CIO of the Wealth Plan Group. Today I'm going to be speaking about the chart of the week. And the topic of this week's chart is inflation. And we've titled this chart Inflation Dynamic in One Chart. And we think this creates a very clear picture. So if you look at the chart I'm referencing, we've included three series in the data. The first series in green is the M2 money supply, so the amount of money in the economy. And if you trace that green line through time, you can see that there was a mountain of money created in the economy in 2020, 21, and into 22. This mountain of money was created by the Fed and the federal government with their spending policies to combat the effects of closing the economy due to the COVID virus. So we flooded the economy with money. Then let's take a look at the second line I want to draw your attention to, and that's the deep red line, and that is producer prices or commodities. And you can very clearly see the lag relationship between the increase in money and the increase in producer prices. We think that link is unassailable. And then finally, the blue line is the consumer price index. Now, the magnitude of change is so large in those two prior series that the consumer price index looks muted, but we didn't see this level of increase in consumer prices since the late 70s, early 80s. So in fact, that's a really big move. Now, we see that relationship between change in money supply and then changes in prices. The thing that people are wondering about now is, why has inflation progress stalled? Why are we sitting at 3.5% inflation and not meeting the Fed target of 2% inflation? We think money supply is a great answer. If you look on the far right side of that chart, you can see M2 hooking back up. And as that happened, the progress on inflation stopped. If you look at the horizontal line in the area above the horizontal line but under the green M2 money supply chart, and think of that as a total area of money created in the economy, and then you look to the right hand side of the chart where that green line dips below horizontal, and that's what we refer to as a money destruction environment. If you take the total area represented above the horizontal line and under the green line, and then the total area represented by the horizontal line and the amount of space above the green line on the far right, the total amount of money destroyed is not nearly enough to countervail the amount of money in the economy now. And then the last thing I want to say here is, what's driving money supply destruction to reverse and grow? And I think we have a favorable economic backdrop, so GDP is growing once again, corporate earnings are up. But what's not being considered in that equation is how much federal spending is going on. So we think the culprit in the face of a reasonably strong economy is that the federal government is doing far too much in terms of spending. And that's what we think is driving money supply, and that's what we think is driving the delay in inflation progress. So we don't see this as a quick fix scenario. There's going to be a lot of time and attention required to get inflation down. And really, we're going to focus on this M2 money supply because we believe that's the driver. Thanks for your time. If you need to speak with anyone about your personal finances, we'd obviously encourage you to speak to a wealth plan advisor. We have a large network of very capable and talented advisors who would love to speak with you. Until next week, hope you enjoyed this chart of the week.